Hey everyone, this is Dan with Theta Trend. Today is Thursday, January 21st, 2016. It's about 2:52 p.m. here. The market closes at 2 p.m. Mountain Time, so it's been closed for just about an hour, almost an hour. Today was a pretty uneventful day in the market. The Russell 2000 really didn't do much. As you can see here, so we're looking at the daily chart here. We just had sort of a spinning candle. And really didn't get a lot of new information. One thing that I do think is worth pointing out, though, is the ratio of implied volatility to historical volatility. For some reason, I'm having a hard time opening this. But at any rate, the spread here has really gotten pretty wide. So the implied volatility is trading at a premium to the 20-day realized volatility. And that doesn't necessarily mean anything, but it's just something that's worth pointing out. And this indicator down here also shows the difference. You can see that it's been rising over the course of the year with the sell-off, and it's at a relatively elevated level right now. But if we drop down into the 65-minute time frame, what we saw is we saw this move lower, 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 and we broke down through this box here. And this box sort of represents, in my mind, an area that we see some price stability, some consolidation. The auction market guys would call this an area of balance, basically where price trades back and forth around some mean. And what we saw yesterday is this big rally higher, and from there we came up into the 5-day moving average, which is now sort of starting to smooth out, to level out a little bit. And price just kind of chopped around here today. And so this isn't exceptionally bullish, but it isn't as bearish as what we've been seeing. That's certainly not to say that the market can't head lower, but just it seems that the rate of descent has slowed. And I know I've been saying that for a couple of days in here, but I do think we're seeing some additional evidence of that taking place. So one of the other things I wanted to just point out, I tend to watch the futures trade during the day, and so the TF is the Russell 2000 index future. And one of the things that I like to watch, and so we're still here on a 65-minute time frame, one of the things I like to watch is the week-to-date volume-weighted average price. And that's indicated by this blue dotted line here. And here you can see it dropped way down, and this was the start of a new week when the futures started trading. And so we know that if price is trading up above the volume-weighted average price, the average long participant is making money, and the average short is losing. And when price is trading below, the sellers are more aggressive, and the average seller is doing well, and the average buyer is not. But coming into this week, one of the things that's interesting is we saw price come shooting back up again, back up above the week-to-date volume-weighted average price. And today we were actually able to hold up and above that level. And so that's somewhat significant. Up until this point, every time we've sort of gotten above it, we've failed, and we've had a lot of heavy selling lower. And the same type of thing here. We saw the week-to-date volume-weighted average price act as resistance for the market right around this 1030 level or so, and price sold off from there. So if we drop down even a little bit closer than that, this is an intraday 5-minute chart of the Russell 2000. And so what we can see here is the blue dotted line is the 1-day. And this is just the volume-weighted average price on the day. And the purple down here is the week-to-date. And so you can see today was really just sort of a choppy mess in here with price trading around the volume-weighted average price. There was really no direction, and it was just kind of a meaningless day. But if we go and look at the position, that's probably what we care more about. We can see how we're doing. So price closed here at 997.34. The open loss on the position is about $33. Prior to this, I was in another butterfly that I rolled lower. And that adjustment's not included here. The loss on that position was about $7 after commissions. So pretty negligible. So we could say that this trade has an open loss of around $40 or so, something like that at this point. But what we're seeing right here now, delta is essentially flat. There's relatively low gamma. Theta is starting to tick up very, very slightly. We're still, I want to say, okay, so we're about 56 days to expiration. So we have a little ways to expiration. But in general, we're doing okay. The upper level here is about 1025. And this is where we're going to be looking to make an upside adjustment if we get there. And, incidentally, that's kind of the upper bound of that box, or it's relatively close to the upper bound of that box that we were looking at on the 65-minute time frame. So 1025 is right in here. So if price gets here, we're going to be adding another butterfly. And we haven't seen it happen yet. If price goes lower, our downside adjustment point is down around 940-ish, somewhere in there. So coming back over here, 940-ish, the market would essentially need to make new lows. And you can see I've put these little alerts here on the screen as well. So I just create the alerts inside of the software, and then I get an email and a text message if price reaches those levels. So until that happens, I really don't think about the position too much during the day. I just kind of let it manage itself, because as we can see here, there's really not a lot of things that can go wrong in this trade within a relatively wide range. So at any rate, that's all I have for today. I hope it helps, and we'll see you soon.